I would now like to review with you how to calculate the home office deduction and how to use the home office deduction and how to use and report the information on Form 8829. Now, I'm going to do problem 64. So in the textbook on problem 64, it says Rita owns a sole proprietorship in which she works as a management consultant. She maintains an office in her home, 500 square foot, where she meets with clients, prepares bills, and performs other work-related tasks. Her business expenses, other than home office expenses, total $5,600. The following home-related expenses have been allocated to our home office using the actual expense method for calculating home office expense. There's real estate property taxes, interest on a home mortgage, operating expenses of home, and depreciation. Now, also assume that not counting this sole proprietorship, Rita's AGI is $60,000. Rita itemizes deductions, and her itemized deductions for non-business taxes is less than $10,000 by more than the real estate property taxes allocated to the business use of the business home. Assume Rita's consulting generates $15,000 in gross income. What is Rita's home office deduction for the current year? So this is performed very similarly to the rental income. You have your Tier 1 expenses, and your Tier 1 expenses are mortgage and interest for business use of home. Now, the mortgage and interest, because it's business use of home, not all the mortgage interest would be put on 8829, only the portion that pertains to business. In this problem, they told us that the square footage of the home was $500, just dedicated to the business. They didn't give us our total square footage percent. If you have to calculate the square footage percentage, you would do this on Part 1, Form 8829, where you would take the office square foot, the business dedicated, just the room, I should say, dedicated to the business. In this case, it would be 500. And then you would take the total square footage of the home to get the percent that is used for business. Now, in this problem, they gave us that the gross income is $15,000. And they then went on to say that the business expenses was actually $5,600. So the gross income less the business expenses, this $9,400, would be from Schedule C on the 1040. It would be Schedule C for the 1040 form, and that would be the net income from the business. So that would be $9,400. And you would actually put that on line 8 from Schedule C. Okay, now we would take the Tier 1 expenses. In this case, they told us the total amount already allocated to the business, which they calculated by taking the total mortgage interest and the total real estate taxes and multiplied it by the percentage in Part 1, and they actually calculated for real property taxes $1,600, and that would be put into the indirect for mortgage interest, and the real estate would be the indirect on the form 8829. So that would be your tier 1. So you would take your income from Schedule C less your tier 1 expenses of $6,700. So you still have $2,700 of income to actually report your tier 2 expenses. And your tier 2 expenses would be indirect expenses. Now here they gave us a total number of operating expenses for the home to be $800, which is the total expenses times the percent calculated in part 1, and that was $800. Example of homeowner expenses that can be used in tier 2 could be your utilities, it could be your homeowner's insurance. Of course, it would be based on that percentage that is dedicated just to the use of the home. It could be other expenses that would be incurred, could be not only your utilities, but you could have a phone. Now with the phone, it should be dedicated just to the home office. And in that case, you would actually have a direct reporting where it wouldn't be subject to the percent of that space dedicated to the business, because the phone would be dedicated and would have a separate line than the home line. Therefore, they could deduct the full amount. Another example of calculating the full amount is any maintenance you would do. So your indirect are your overall expenses for the house that you can allocate to the 8829 for business expenses. The direct expenses are those expenses dedicated just to the business office. Now, most of these would be personal in nature, so they would not go on the itemized deductions. Now, in tier 1, the amount not used for the indirect mortgage expense and real estate taxes would go to the itemized deductions. So in this case, we had $2,700 after subtracting the mortgage and interest dedicated to the office, and our other expenses, which were considered indirect, is $800. Okay, so after subtracting the 800 from the balance after the two tier 1 expenses, we have $1,900. And remember, depreciation is limited for the rental property up until the balance after tier 2 expenses. So in this case, the actual depreciation is $1,600. So there is no limitation, because after the tier 2 expenses, you have $1,900 minus $1,600. That gives you net income from business. Now, if you had $2,100 in depreciation, you would have been limited to the $1,900 deduction for the depreciation, and the $200 in excess of the $1,900 available for the $2,100 of depreciation, the $200 would carry forward. Another thing I would like to point out, just like in rental calculations based on tier 1, tier 2, and tier 3 expenses, the tier 1 expenses subtracting the tier 1 expenses from the gross income less the business expenses, can in fact create a loss and be used to recognize the loss in the Schedule C. But only Tier 1 expenses can be used, not Tier 2 and Tier 3.